Hello everyone. In today's video, I'm going to go over step by step how to properly fill out your W-4 form for payroll purposes. This was a highly requested question over these last few weeks, so I decided to do a video. Remember, my channel is all about taxes and entrepreneurship, not just solely about small business matters. And hey, maybe you're an entrepreneur who still has a traditional job, or you may have a friend who needs this information. So basically, yes, that's why I did this. This was a highly requested question that came in, especially at the beginning of this year. Okay, if this is your first time finding me, my name is Tasha. I'm a tax strategist, business consultant, and coach to middle and high income entrepreneurs around the United States. To everyone who is already a part of my community, welcome back. If you're new, please be sure to subscribe and turn on your notifications, okay, so that you don't miss my next video. All right, so now let's head over to the form. Now, most likely your employer is going to give you the form W-4 to fill out, but if you need to locate it yourself, you're going to come to irs.gov, and you're going to go to the search, and you're going to enter W-4. Then you're going to come down here, and you're going to go to the form, okay? So now, everything at the top in step 1 is very self-explanatory. You're going to fill in your first name, middle initial, last name, social, address, city, state, and zip. Now, this is super important, your filing status, because basically whatever your filing status is going to be when you complete your 2022 tax return, okay, that's what matters with this. All right, so like if you're single or you're going to be married filing separately, then you want to check this box. If you're married filing jointly or qualifying widower, prayerfully not, but you would check that. Okay, head of household, you're going to check this. Now, where a lot of people get this filing status confused is that head of household is not attached to the address. Head of household is attached to the person. Let me give you an example. Let's say, for instance, you have a young woman about 22. She has a 3-year-old child. But the 22-year-old is still living at home with her mom. Okay, she's single. All right, so she would be head of household because she's taking care of her child. Okay, sorry for that. Okay, and so that's what that is. She's not claiming to be head of household of her mother's address, okay? It's because she's taking care of a child. Now, you have single people who live alone, and they'll say to me, well, I'm head of my household, but that's not what IRS is talking about. You're a single person. Okay, if you live alone, not caring for any dependents or whatever, you're not head of household. That's just how that works. Okay, so I wanted to explain all of that. Now, I'm going to be honest. If you want to really keep this simple and short to the point, sweet and short to the point, you can just do that. And then you can come down here and sign, and you're good. Okay. All of this, steps 2, 3, and 4 is really optional. And even 4 mentions is totally optional. But a lot of people don't realize these are also optional. You don't have to do these things if you don't want. Okay, step 2, 3, and 4 are really set up to kind of help you avoid overpaying your taxes throughout the year. But honestly, if you do something in these steps that's incorrect, you can actually wind up underpaying and then having to owe when you file your income tax. So again, these are all optional, and just be really, really careful. All right, so let's go to step 2, because obviously for this video I want to make sure I'm giving you value and taking you through the steps. Now, step 2 really applies to if you have more than one job, or if your spouse works, and if either one of you have more than one job. Okay, but let's say, for example, you're married, each of you have one job. Okay, then you're going to just come over here and check this box for C. All right, if there are only 2 jobs total, you may check this box. All right, and then do the same for the other W-4, meaning your spouse has to do the same thing. They're going to come over here and they're going to check this box as well. Okay, and then you both should be good, and it's highly unlikely that you're going to have to owe any further tax when you file. But if you have more than one job, or let's say one of the spouses has more than one job, you might want to go to this resource they provide here, irs.gov/W4 app, because you can fill that out and answer some questions, and it can kind of help give you guidance, all right, on what you should be doing. Now, there is also a worksheet, but the worksheet may or may not, you may find it a bit confusing, so for that, just go to the app and answer those questions. But the worksheet is available if you want to do that, okay? So basically, yes, that's what we're doing in step 2, okay? Now, let's come to step 3. Step 3, if you earn this amount here, sorry, I just lost my train of thought for a minute. But let's say your total income is going to be like less than 200,000, or if you're married, less than 400,000, right? And if you meet these income thresholds, and you have children under age 17, you can multiply that number here, the number of children. So let's say you have 2 children under age 17, you meet these income guidelines, then you're going to enter 4,000, right? That's what you do here. Now, if you don't meet those income guidelines, then you wouldn't do that, because you're not going to qualify. This pertains to child tax credit. That's what this is for. So if you're out of these income guidelines, you don't even qualify for the credit, so you would not put any amount here. Okay. Now, if you're claiming anyone over age 17, even if it's your only child, even if it is a child of yours, maybe they're 18, 19, they're maybe unemployed, they're still living at home, you would put that number of those people here, 500. Maybe a cousin moved in and began to stay with you, and now you're supporting them. You'd put 500 for them as well. Okay. Because that's how much you're entitled to deduct. Again, these are just optional to help you not overpay, okay? You'd be bringing home more money in your paycheck, and that's how that will work out. So once you get these 2 total numbers, that's going to go here on line 3. Okay, now let's go to step 4, okay? So if you have other income, like let's say, for example, you have dividends, you have interest, you have retirement money, or let's say you even have like a side business that you make. Let's say your side business sometimes brings you an extra $10,000 a year, right? You'd want to put $10,000 here, because that's going to help in terms of the correct amount of tax coming out. Because when you have your own business, there are no taxes coming out, right? You got to handle that yourself. But you can fit it in here, and then enough taxes would come out, or projected. I say projected because that's what you're kind of doing with 4A. You're kind of projecting, because even with interest and dividends, you don't really know how much you're actually going to get, right? So you're kind of projecting. So that's what you're doing there. Now, 4B for deductions, honestly, ever since the Tax Cuts and Jobs Act from 2017, okay, I know that was a lot, there was so many changes made with that tax year that a lot of people don't really qualify to itemize anymore. More and more people are beginning to take the standard because they don't really qualify for the itemized. Okay, there was a lot of things that eliminated. I'm not going to go over all of that in this video, but basically because of all of that, majority of people just go like with the standard. So, but if you do still qualify, you could put what you usually would claim for itemized deductions here. Okay, so that also is going to help you, again, not overpay your taxes. All right, and then extra withholding in 4C. Now, some people like to do this because they just want to, some people are like fanatical. Like they're like, you know what, I just want to make sure I don't take an extra $50 per check, whatever, per pay period. So listen, everybody, they make their own choices, and some people would just prefer to do that because they just want to make sure that they do not owe anything when it's time to file, and they don't want any problems or whatever, so they just prefer to do that. Okay, so you have that option. All right, and that's what you do there. So I think I'm pretty much finished with those sections. Let's see. Let me just look at my notes over here. Oh, what I do want to mention is that this form only applies to taxes on a federal level, okay? If you live in a state that has state withholdings from your payroll, then you will have to separately fill out the state form. Okay, most of them are not called W-4, but whatever they're called, you would fill that out for the state. Okay, notice that the W-4 forms, you know, we can no longer claim an exemption on payroll like we used to. You know, when you used to just put a number in, like, oh, I'm claiming 3, I'm claiming 5, whatever. It doesn't work like that anymore. But on a state level, most state levels still have that option. Okay, but I did want to make sure you understand that this is just for federal purposes only. Okay, so now you're ready to submit your form. All right. And you're good. And as I said, you may want to do this every year, because here's the thing, right? Sometimes we have life changes, right, throughout the year. Again, with the filing status, you may have been married and now you're divorced, you know, or separated. Maybe you were single and then you got married, okay? Maybe you used to be the head of household, but now your child moved out, so you no longer are claiming them. So now your filing status transitions to single. So it's multiple reasons why you would want to fill out a new W-4 form each year. Okay, so just take all of that into consideration. And the same thing with these case scenario. Maybe you had them taking out money because your child was under 17, but now they turned 18, but the taxes is still taking this out, right? So you would want to adjust your W-4 accordingly each year. Okay, so I do thank you all for watching. And actually, if you're a small business owner filing taxes for the first time, I have a course just for you, and you'll find all of my contact information and courses and free resources as well in the description box below. Okay, you can also book me for a consultation to get your personalized questions answered. Thank you for watching, and see you in the next video.